your own financial statement. And at the same time, you should be able to write the story of your own business to that of the banker, to the investors, or even to your employees. And I think what is most important of all is this. As for yourself, I can promise you that this 1.5 hours is going to be a very fruitful time spent, because I will share with you some concept that will help you to think more clearly, especially as regards to financial matters. So without any further ado, let us plunge in. So please feel free to pose your questions. I'll answer it as we move along. Okay, let me start by sharing with you the video. So do let me know if you have problem with the sound.
The monthly budget meeting. Another valuable opportunity for every department to connect and communicate, check their numbers, and get support from their peers. So, why the grim faces? Linda from HR is nervous because she's never understood financial statements, and she's afraid this is the month she'll be found out. Steve from sales thinks the only number that matters is the top line, the revenue his department generates. Allegra from production isn't even going to mention the new machinery she needs this month. She's already been shot down 4 times. Yes, everyone hates these meetings because while they all act like they understand what's being discussed, in fact, they don't. What's this? CEO Cindy has something to announce? She's bringing in a training company to teach us all about accounting. Accounting? Oh no, not accounting! But then the training begins and something amazing happens. Minds begin to change. Light bulbs begin to illuminate above the heads of everyone around the table. Smiles begin to creep onto their faces as concepts long thought incomprehensible are suddenly made abundantly clear. Now, Allegra knows how to frame her case for the new equipment in terms that the rest of the team can get behind. Steve now sees that it's not only how much his team sells, but what they sell and at what price that matters. And Linda is now empowered to confidently talk numbers with any member of the executive team. CEO Cindy is more confident about meeting her goals because of her team's newfound ability to speak a common language. Wonder if this story is true? Well, it's been repeated time and time again around the world, with firms ranging from small businesses to multinational corporations. Big 4 accounting firms and giant Wall Street banks have sung our praises.
Okay, a very good afternoon to everybody, especially those newcomers. So I've just shown you a video. So I'm going to sort of get some feedback from you all. I'm going to switch to a white screen. So do feel free, unmute yourself. As it is, I know all of you come from diverse background. We don't really have a chance to interact, but maybe just shout to me. What is your purpose of finding out a bit about accounting? Can someone just shout to me? You could just unmute the mic. What is it that you're looking for when you are looking at accounting statements? What is the purpose? Anyone? I'm sure nobody is looking at this just to pass exam, because all of us are all working adults. Anyone care to share? Or everybody is too shy? Okay, I think since we are not hearing from anyone, I'll take it from there. That I think a key purpose is this. You either love numbers or you literally have a freeze. Okay, I think someone wrote there, understand, that is good. Apart from this, any other reason? Do we have any investors here? Buying into good companies that can make money for you? Okay, so as what we could see, apart from understanding, looking at numbers, priming to go for a good investment, I think there are also other reasons from the perspective of that of companies and also employees. So this is something that I'm going to explore briefly with the group. So let me just continue with my sharing. So do feel free. I'll come back to this part again. Yeah, I think one of Zen, thanks. It is to monitor the expense and the profit. So this is what they call the bottom line. And as what we will discover later on, accounting is a very interesting subject because it is not just technical in terms of what you must do, the procedures, but there's also rich with a lot of jargons, things like profit. Making profit means you are making money. So these are something that we can talk about later on. So let me just proceed with what we were looking at just now.
As have government agencies,
So why is this training relevant? What I could share with you is this. A lot of people, both employers and employees, don't really quite understand the impact of income, the organization income on their bottom line, because this is literally going to determine the survival of companies. So the numbers are very important. So apart from that, this is also a very interesting finding from the research that companies with low engagement score earns a lower operating profit. In fact, 32% lower than companies with staff who are more engaged. So what we are trying to say is this: if you have employees who understand what the company is doing in terms of the numbers, in terms of the finance, that translate ultimately to a higher operating profit. So that 2 points itself sort of really underscore the importance of understanding the accounting or the financial aspect. So what I could summarize in 2 words is this word called business acumen. Business acumen, basically, it is the ability to understand how business operates and make money. And also, especially in the current landscape of COVID-19, or what they call the vulgar landscape, volatile, uncertain, complex, and ambiguous. A skill that you're able to proactively anticipate, navigate, or even leverage on trends that will impact your business. And this is what we're looking at. So in order to build this business acumen, you can see that the foundation, it is what we call the accounting literacy. So the accounting literacy will get you started. And from there, you develop financial literacy. So as what we can see, there is a price, there's a cost of not knowing about accounting. We are not training people to become accountants, but more to be financially or accountingly literate. So the cost of not knowing accounting are as follows. Because there is life after a company being wrapped up or liquidated or bankruptcy. That kind of life is not what we want. It's difficult because you do not just wrap up a company, because there will be a transitional process. Apart from that, the importance of knowing the accounting financial statement is important because it helps executives, managers, CEOs to make optimal decisions. So without those information, the decision made will be suboptimal. Another reason is this. The numbers could also be the foundation for divisions within the company to communicate. It is a common language that we can use in businesses. Like what we have seen in the video, the HR department could be communicating with the marketing department, marketing could be communicating with the finance, and all of them are using a simple, common accounting or financial language. So apart from that, we also see that from the research that employees disengage from the mission of the organization without knowing or in actual fact measuring what the company is performing. Okay, last but not least, the numbers would also come in handy for directors to ask the right question. Budget meetings, I think this is something that all of us are familiar. So what is it that we are looking at? What is it that the accountants would want from us? So all this are part and parcel of what we call accounting literacy. So now let us move forward and let me share with you. And also, well, this is where we can have some hands-on fun. I'd like to share with you how accounting has changed. As what you could see on the left-hand side, accounting in the past, it is very difficult because you have to maintain your journal books and it is very tedious. Now, thanks to technology, everything is easy, all captured in your PC. So as what we can see, accounting is easy. So likewise, I think something has been jammed up. Let me just see what is going on here. So let us start with a very simple definition. So that will be the underlying understanding for all of us. Okay, what is accounting? Anyone like to volunteer an answer? Please use the mic if you want to. Okay, maybe just to help everybody, look at some of the images that we have here. You can see that, let's say this is your kitchenware. What do you see? Everything is all organized in a very neat manner, right? The saucers are all by itself, the cups are all by itself, the spoon is all by itself. Okay, look at your clothing, your wardrobe. Do you have a way to organize it? Some people I know that they organize their clothing in accordance to the day. Monday, these are clothing they have. Some do it by a system of t-shirts with t-shirt, short sleeve shirt with short sleeve shirts. Okay, so likewise, in terms of information that we have in a company, we are all overloaded with information. So how do we organize all this information? And this is what accounting is all about. You're organizing all your financial information into something that we will call financial knowledge. And these are important for you to make decisions. So what we're going to do in color accounting is that we provide a system, a visual system, to help you to understand what is going on and ultimately to extract the information, the knowledge that you want that will help you to build your business acumen. So like, for example, you have all this information. These are all numbers. It could be receipts that you have. So what we will do in color accounting is that we make things very easy. Can you recognize what is this? This is your bento box, right? You got different departments. You put different things in there. So likewise, we have a system that organize all the financial information into something that we can see visually, and we would also use color to help in your understanding. So it is not the kind of accounting classes that you've been exposed to if you have attended some accounting classes where you only see black and white. So I'm going to illustrate a bit more of that later on. So accounting itself, just to sum up, it is a kind of organization, a system, a framework to help you to put together volumes of financial information and do it in such a way that it is now organized into valuable financial knowledge. that can help you in your decision making. So you can see that now accounting can be easy. And to make it even easier, what we're going to do in the workshop is that we are going to introduce to you structure, mechanics, and language structure. Because with structure, it will give you clarity in your thinking. So with clarity in your thinking, you can communicate clearly as well. Mechanics, there are many, many movements, transactions that is happening in an organization. So we will take you through a series of very important transactions. Okay, and you would also be immersed with accounting languages. Things like what is profit, what is amortization, what is account, accrual, account receivable, account payable. So all those, we'll be looking at it. So how are we going to do it? So this is just, what I'm going to do is this. I'm going to give you a sample, a taste of the color accounting workshop. So I'll take you to one session and you get a feel of it, that accounting can be easy and accounting can be interesting. Okay, so like what you could see from this overview, the materials that we use are all very visual and it is in color. Okay, so let us start at some fun. Okay, so these are what we call financial statement. So on the left-hand side, you can see the balance sheet. And on the right-hand side, you have your income statement. Okay, so as it is, let's say you are to make sense out of this. Part of your budget requirements that you have to understand what is going on last year to make some forecast of what is going to happen next, right? So I think this is a tour that most of us hate to do it, especially if you are not accounting trained. I'm going to show you now a much easier way. So what we're going to do is this, is that this is all black and white. We're going to add some colors. And also, we are also going to help you to understand some language. So we're going to use color, like the A. This will stand for assets. Assets are the valuable things that you have. And we're going to use yellow. This will be on the other side of your financial statements, L with liabilities, E with equity. So basically, we will be using two colors, green and yellow. So that is to show you a structure, something that we can use to enhance the understanding of what we are seeing. What is black and white previously is no longer going to be black and white. So it's like the animal, the zebra. The zebra that we see in a zoo is always black and white, right? But what do you see here? We are seeing a multicolored zebra. Isn't that more exciting? So we are not going to look at just the straps, the black and white. We can look at more than that. We're also going to look at the movement. How does this come in? And also how it appears. Okay, so we're going to show you an example how we're going to do this. And this is where I need your help. Okay, so maybe I would like to go back and see whether there are any questions for anyone. Okay, anyone has any questions before I proceed further? You can just put in the Zoom chat. I'll answer it. Okay, not okay. Thank you. I'll resume. We'll proceed with. Okay, so what we're going to do is this. Before we even want to take this apart and try to understand the details of the informations, what we will do in color accounting workshop is that we provide a structure where it is black and white previously, we put in color. Okay, you can see that we have got green colors, yellow colors, and purple color. So this is where I'd like to introduce to you a framework. We call that BASIS framework. BASIS, BA stands for balance sheet. Balance sheet is basically a financial statements that record on the left-hand side the assets, and on the right-hand side, you have your liabilities and your equity. Okay, then below it, this is where you have the income statements, which is another financial statements that measures the expenses that you have and also the income generated. So the difference of that becomes the profit. So what we try to do is this: we want to make things simple. We like to look at everything all in one page. So what we can see is that we can see the whole accounting financial statement all in one page. And we call that the BASIS framework. And we have the colors to guide us. And that makes things easier. Okay? I'll demonstrate this as we move along. Okay, so I'd like to work on a case study, and we're going to do it together. Okay, so what I'm going to do is that I'm going to share the screen with you. Then after that, if you got anything, you will just ask question on the chat. Okay, I think in class will be much easier because you will have the workbook in front of you. I'll share with you what are the materials that we'll be using for this workshop. So it's definitely hands-on, and you're going to see right in front of you whatever that I am showing on the screen. But today I would not be able to do that. So just work along with me. So to start off with is this concept of duality. Accounting is pinned on the concept of duality. It is like an example of an aeroplane. An aeroplane has two wings. You need both wings to fly and to navigate. So likewise in accounting, you need to have duality. So every transaction that you have, there are also two sub-actions. So this concept of duality also leads to some financial confusion. I think some of you might be thinking about debit, credit. No, okay, don't worry about that. We have a way to resolve that. But what is important is this duality is very important. Everything that we do, we will work on this basis of duality. So a good way to understand this is to imagine a beautiful butterfly. The butterfly has two wings. So we're going to use this butterfly concept to introduce the concept of duality. Okay, so let us start by looking at an example of, let's say, we're going to start a business. With COVID-19, I think a supermarket would be a good business to go in, right? Everybody buy food. So what we have here is we have a supermarket. So let me bring in this concept of duality and let us see how we proceed from there. So to start off with, I think we need to have a name for our business. The importance of what we're going to look at, it is all from the perspective of this name. So it's global retail. So what we're going to see is that the balance sheet that you're going to see, or that we're going to look at, it is from the perspective of global retail, meaning the business are going to show you what are my liabilities, what are my assets. So this is very important. So if it's that of investors, that will be from the perspective of investors. If this is the bank that are lending money to this retail, the perspective is that of the bank. But what we're looking at here, we're looking at that of the business. So we will have to start off by saying all the things that we can discuss is all about this business with the name called global retail. So let's say we start off with having an assets of 50,000. Okay, assets simply means it is something very valuable. So we have an assets of 50,000 because we need these assets to be used as cash to buy, what do you see here? The merchandise, even the carts that you use to push things around. So we have an asset of 50,000. So with these assets, the next thing we need to know is this. These assets, it need to come from somewhere. Somebody or somehow you have a way to finance this 50,000. So this is where in accounting, like what I mentioned just now, there is always duality. You look at this side, you also have to look at the other side. So this 50,000, how does it come about? So this is where we like to introduce the concept called liabilities and also that of equity. So what you're seeing here is simply this. You're seeing on one hand, these are obligations, on the other hand are valuable. So going back to the assets, the 50,000 that you have there are valuable things, it is of value. You can measure in dollars and cents. So these dollars and cents come about because you have, as a business, got into some legal obligation. So the obligation comes from two sources. One is an external obligation. You borrow a loan from a bank, let's say 30,000. We call that liabilities. That is your legal obligation. And at the same time, the source of finance could also be internally generated, meaning the shareholders to start this business, they inject in the capital. They inject in 20,000. We call that equity. So you have an internal source of financing and an external source of financing. Okay, and what you're looking at is called balance sheet. So means the left-hand side must balance with the right-hand side. So here you have 50,000, here you have 30 plus 20, 50,000. So numerically, it matches, balance. But in terms of what you're measuring, these are valuable things, these are legal obligations. So this equal sign means it is only equal in terms of the obligation, because you might have something that is more valuable that you cannot measure in numbers. Okay, so this is how we use pictures. We have activities to bring in concept like balance sheets, obligations, assets, liabilities, and also introduce a simple formulas whereby you have assets equals to liability plus equity. So this is what we do in a workshop, and we make it alive, we make it visual. And also to make things easier, we even show you that if you want to know as a business, who is giving you the funding? Where are the sources the funding come from? So this site, you can see that my funding comes from an external source called liabilities, internal source called equity shareholders. So what do I use this money, this 50,000 that I have? I use it to buy valuable things. It could also be part of the cash that you have in the bank account. And that we call that the users of the fund. You have the source of the fund where the fund come in, and you use the fund in a impactful way. Okay, so that is what you need to know about the balance sheet. Very simple, very visual. So this is also some of the other activities that we do, that these are the dollars that you have. This is what we do with the dollars. We call it the dollarization, because the money you pump in 50,000, I will use it to buy stocks. I buy the merchandise so that I can sell. Some of it, I use it to pay for my rental. Okay, so we'll look at it later on. Okay. So apart from this, going back to just now the bento box concept, look at this. Does this look like a bento box? You got 5 compartments, right? So what we have is that the first 3 compartments is what we call this side, the balance sheet is your assets. This is the liabilities. These are your equities. So this shows you the sources of the fund, the users of the fund. We indicate this by the color green. We indicate this orange. Okay, so basically, in one glance, you can see everything only in one page that you have things that are valuable. We call that assets. And these are more of the obligations to the lenders, liabilities, obligation to the owners, equity. So all this put together, we call this the balance sheet. So explaining from here, we look at some examples. Here, you got 20. So this is where the cash went up. You inject in. So what you see here is initially the bank loan comes in. This goes up. This goes up. This is the duality. This goes up. This also goes up. You got 30,000 from a bank loan. You put the bank loan that is in cash. You put into your bank account. Injection of capital by the shareholders, that also goes in the bank. So in your bank itself, cash, you will have 50,000. Okay, so we have a series of activities, in actual fact, 15 activities to help you to understand how the movement of the fund come about. I mentioned just now, we focus on three things, which is the structures, the movement, and also the language of accounting. So this is how we get you really to DIY it in the class. Okay, so these are what we're having. Simple enough? Okay, so now what happened is this. Let's say at the end of the day, let's say I'm running a management consultancy firm. Okay. So I'm going to do something that is very valuable, which is revenue. And I need to sacrifice some assets, and we call that value sacrificing activities. A simple layman language, we call that expenses. So the difference between these expenses and the income, we call that profit. So now, let me ask everybody this question. Who would get to share that profit? The profit itself, it belongs to owners, the business owners. So you can see it is parked in this little purple square, what we call generated equity. You're using all these sources of fund to buy assets so that assets can be used, sacrificed as expenses, in order to generate revenue or income. Okay, it means the same thing. So with that, I have profit. So this is where we use a diagram that is very visual, that you can see, you can relate to, and also we sort of use colors, all that to bring home the impact of how business is being run, and also the impact on that of their cash flow. Okay, so let us do an example. Let's say now you have also another business, you're also in consultancy. So everything is all laid out nicely for you. You got your money from bank loan, 30,000, you borrowed 30,000. Shareholders pump in 20,000. Okay, so all this are put in as cash, 30,000, 20,000. Okay, so what happened now is this, your first consultancy job, you're paid $700. So now the question now is this $700, they pay you cash. Where do you think this will appear? Okay, as what you can see here, it is here. Your cash goes out by 700. It is from the revenue here. Now, remember, I mentioned just now, everything happened in duality. So what is next? So I need to show that in order to do this, I need to incur certain expenses. Let's say that your client is in Jurong and you have to take a taxi. So over a month, you incurred travel expenses of $300. So that is your expenses. Your expenses comes from your assets. You sacrifice your assets to generate revenue. So this is how we put the bits and pieces together like a nice little jigsaw puzzle. But ultimately, everything links together. And we use terms like value sacrificing, value generating. And all this that you see are all happening within the 5 boxes. The 5 boxes, it looks like your bento box, right? 3 on top and 2 at the bottom. Okay, maybe I will take some question at this point. Anyone have any questions? It is a very interactive way to learn accounting. I took accounting. I'm not an accounting major. I'm more of a finance guy. I took accounting. I could, at a master level, I also had problem. I think, but with this system, I think things are much easier. You get a lot of aha. Suddenly, you get to see things that you don't get to see. Okay. Please feel free to post the questions in the group chat. Okay, if not, let me just continue. Then we can have some time to answer some of the questions later on. So these are the 5 boxes that represent the balance sheets and account the income statement. Now, let us now move on. Let us look at the growth of a business. How do you grow a business? Let's say you start with 50,000. How do you move on and make it 50,000, $500,000, and ultimately $1 million business? So this is where we're going to introduce the concept of value cycle. So what you see here is this. You start off by having a good source of finance. Someone provided the money. It is like the seed money to grow your money tree. It's like you need your durian seed to grow your durian tree, right? So this is the seed money. The seed money is used to buy assets. It could be your factories, it could be your inventories, it could be your machineries. So these assets, it will be used. And we call that expenses. You need to sacrifice the assets. The assets all have lifespan. That is expenses. And why sacrifice the assets? Because that with the expenses incurred, I can generate income. Okay, so with income, I will make profit. So with the profit made, what I will do, I'll buy more assets. So you can see that this is like a cycle. The more assets I want, the more income I need to generate. So the faster I can generate the assets, the faster I can grow my business to generate the income. So it is a cycle. So the growth is dependent on how fast you turn around your assets, translating that into expenses and income. And that is the value cycle of business. Simple, visual, and there are activities to support that. Okay, so this is where I like to share with you some of the actual activities that we'll be doing in the workshop itself. The workshop is going to be a one-day workshop. Definitely, it's going to be hands-on. So all the materials you can see is all very colorful. So we do have specially made boxes. These are to represent what we call the general ledger. I think you talk to your accounts people, they'll tell you what is a general ledger. So what we do is we do it visually by having boxes. You have a green and your yellow, and this is to indicate, some of you might be familiar with the term credit and debit. So everything is all in colors, and there are some rules that we will need to observe as we sort of work out the transaction. Okay, so this is the set that you'll be using. We have made a lot of improvement. Previously, we used it like a box that you move around. Now we have everything all in one flip side. So even after we have played the game in class, you go home, you can have a second round of playing with this. So the materials all come complete. You got the storyboard itself. You got a workbook. Everything is all in there. You have also the transactions strips, everything in duality. You got a green strip, orange strip, all numbered. Okay, so this is how this is going to be done. The bucket, we use concept like buckets to represent the accounts and their color. So that's why we have the name color accounting. And you would also need to name the buckets. So this is where we introduce you to the different accounting terms. Like you have accounts payable, accounts receivable, accumulated depreciation, overheads, prepaid expenses. Okay, so the whole range of income accounting that you are used to, but now what you get to see is that you can do it visually and also with some fun. Okay, then the transaction sheets or what accountants call journals. As what we mentioned, there's always two sides to it. You have the dual effect. So you have the orange and the green. Okay, so this is a very important component in color accounting. We use color instead of using terms like debit and credit. Okay, let me illustrate to you how the color can be used in a very visual manner and in a much easier way. Okay, so what you have here is this. You see a bucket that is of two colors. You have a green bucket and you have a orange bucket. So in the buckets, I put in strips. These are the strips that I'm talking about. You got a green strip and a orange strip. So what we want to show is this. We want to show increase or decrease. So when I put the same color strip into this green bucket, green strip, the green bucket, that shows an increase, or in accounting term called debiting. If I want to show a decrease, I put in a different color strip. So orange strip in green bucket, that shows a reduction. Okay, so likewise, if you have an orange bucket, I put in an orange strip. Orange strip with orange bucket, that shows that there's an increase. Counting term is called credit. I think very confusing, right? But if you just remember the color, it is much easier. Yellow strip with yellow bucket, increase. Then if I want to have a decrease, I put in a green strip with inside a orange bucket. Okay, so these are the kind of things that we get you to understand. I think the understanding is the most important. Once you understand all this, later on when you look at the financial statement, things will be so much easier. Okay, let me check. Anyone got any questions? Okay, someone say, okay, if I own a property, where do you park it? Okay, so to answer that, let us ask this question. A property, let's say a building, is that valuable? It is valuable, right? So anything that's valuable, it will go into assets. But at the same time, you also need to ask the other question. Like I mentioned just now, there's always two sides. Where do you find the money to pay for the property? Who financed the buying of that property? It is through a mortgage, right? So if it's a mortgage, it is an external source of funding. So there will be an account open up under liabilities, bank loan, a housing loan. So this is how we sort of go through the transaction. You have one transaction, but there will be two actions, which we use the buckets to illustrate them and also to demonstrate the movement. So property is an asset, property from you, so is your equity. No. I think the property that you're looking at is a property you purchase, right? Equity is strictly equity, meaning these are contributions from the shareholders. Let's say to get the business started, I need 100,000 and I have two shareholders, each contribute 50,000. So the equity itself is 100,000, 50,000 from each of the two shareholders. Okay, please keep your question going. I will press on, then after that we will have some time to answer more questions. Okay, how about that? So coming back to this question of credit and debit, we use buckets and strips. Okay, I have one more final exercise for you. I know usually at this time of the day, asking you to look at numbers, it could be a tall order. Okay, so this is what we have here, what we call a balance sheet. You have your assets. These are what are the things that you have in your assets, your inventories, your accounts receivable, your cash and deposit, buildings as well. Then liabilities. This is where the money comes in from borrowings, accounts payables, all that we will explain in the workshop. The equity, this is the initial capital. Okay, so just looking at this, it is definitely boring, black and white. I think you'll put everybody to sleep. So this is where with accounting, with color accounting, we will help you to enhance the way you look at information, financial information. So what we'll do is this, we put this as green. Ask yourself, are all this valuable? The land that you have bought with your company money, valuable, right? Equipment, valuable. Investment in other companies, valuable. So the stocks that you need for you to make a sale, important, right? Accounts receivable, this is where your customer have not paid you. It's on credit. So they owe you money. It is valuable. They jolly well pay you. So these are valuable, green. Okay, now, how about this one? Liabilities are literally obligation. You have a responsibility to these people. These are all your creditors. You borrow from the bank. Okay, then accounts payable, this is also part of your liabilities. This is where your supplier give you the goods, but you have not paid your supplier yet. It is valuable. So we have it here. Okay, how about equity? The owners give you money because they want to share part of that profit. So you have an obligation. You make sure that your business is profitable so that they can enjoy the profit. So you can see the orange literally talks about obligations, both to two sources of your financing, the creditors and the owners. And all these are used to buy or to finance valuable things, be it the land, equipment, inventories. You sold the things, but you have not received the money. So meaning you're also acting like a micro banks to other people, right? Make a sale, but you have not collected money. Accounts receivable. So all these available things, it is all under assets. Okay, so we also link this to your income statement. At the end of the day, the lifeblood of all businesses is sales. So this is where we capture sales. And at the same time, we need the expenses aspect because this is where you sacrifice the assets to generate sales. So we sort of bring in all the business jargon, like the cost of sales, okay, items. So we will show you how this is being done, the different accounting convention, be it the US convention or the international convention. Then these are your fixed expenses and also your variable expenses. Then we also bring in terms like EBITDA, earnings before income tax, before depreciations, EBIT and EBITDA. So you'll be overwhelmed with a lot of jargons. Don't worry, it is fun, but once you get a hook of it, it is easy. Okay, so then we also look at profit, retained profit. Okay, and this comes from the side. When you make all this profit that you generated here, it will go and be parked under what we call retained profit in the balance sheets. It belongs to the shareholders. That's why you have the retained profit. These are your accumulated reserve, the profit that you have made over the years. Okay, so what we are trying to put here is this. Like what I mentioned just now, we want to show you a structure. At the same time, we will also want to show you the movement, because business is not static, it's dynamic. Within a day, there are thousands and thousands of transactions. So how do you keep track of all these transactions? And at the end of the day, we want to know, hey, at this point, are we making money or are we losing money, or what are our obligations? So this is all being captured in both your balance sheets and also your income statement. Okay, so likewise, to make this easy, we also use color. Value generation sales is to generate more value. So we call that as orange. Okay, so it's under the liability part. The green part is cost of sales. These are value sacrificing activities. It is very linked to your assets. Okay, so this is where we provide very visual descriptions and also interpretations of both the financial statements, of balance sheets, and the income statements. Okay, now there's a final test that usually we get our participants to participate. It is like the final test before they graduate or before the end of the program. Okay, so imagine you are now a CEO and you're going to make a press release. You're going to tell the company and you tell your investors, where are you in terms of the financial position of the company? So this is where you are going to make a speech. And we're going to show you things. It's going to be very simple. You don't really actually have to read a lot of financial reports. Basically, like what we have here, at December 2018, global have asset totaling 1.1 million in use, right? And it's green. Where do you extract this information? So in the course itself, we'll show you that you literally take all this from here. It's green, go to green. So meaning you not only know how to read the financial statement, but you also know how to make use of the information in the financial statement to make a statement, to make your argument. And this is what companies are looking at. And that is part and parcel of what we call financial acumen. Okay, so each one of this is all linked. The debt, this is from the liability part, orange. Then this is the assets funded by shareholders, is the equity. This is their liabilities. And generate sales, this is sales. And it use the resources, these are the assets that are sacrificed as expenses. And at the end of it, it generates the retained profit. So all this are all linked back. So what we have in the workshop itself in the morning, we will go through all the mechanics, the movement. In the afternoon, we will have quite a few case studies where you analyze business to see, okay, you could have a situation whereby the business have a lot of sales. The expenses are high. At the end of it, they still make profit. So the big question, is that good business or is that not a good business? What are the areas that you need to trim? Okay, so it is very hands-on. Okay, so I have one last exercise that I would like you to take a look. And I think I use that as a basis to sum up everything. Okay, let's say we are looking at this company called Google. Okay, I think all of you, as what I've shared, we have looked at the balance sheets, the financial statements, and also the income statements. Okay, so let us just focus on the balance sheet. And in the balance sheet, the green side, you see 117 billions, liabilities is 30 billions, equity is 140 billion. So it must balance. This is the sources of the fund. This is the users of the fund. Okay, so what you see here is this. This company have assets, meaning all the money from the financial, be it external loans, shareholders, add up to be 170 billion, is all used to buy the assets. Okay, now, look at this amount, market capitalization. Google is listed on the stock market. There's a stock price. So based on that, it is 660 billion. 660 billion versus assets value at 170 billion. So now the question is this: what happened to the missing assets? So if you are an investor, you're going to invest in Google, would you go into this company? What are you looking at? What are all these numbers telling you? So this is with an understanding of the working of a financial statement, you would have some insight that this is what the stock market is paying to buy that share. But in actual value terms of the company, this is what it is worth. You see that, let's say, this is all they have. So if anything goes wrong, they pay off all the liabilities, they will still have 140 billion assets. And that itself belongs to the shareholders. Is it that simple? We also need to know what kind of assets. Is it all in cash, or is it in terms of accounts receivable, or is it linked up? Because Google don't own anything that is tangible. So how do you get this 170 billion? So this is with the understanding of financial statement, you would develop your business acumen. Okay, so let me just sort of sum up what we have done. I think we have set out to explore why color accounting is powerful. It is powerful because it literally allows us to understand how business works, and we can do it visually and also do it hands-on. And you could also, I think I have exposed you to some of the things that we use in the learning of color accounting. Okay, so I think I come to the point where I can ask, open the questions to the class. Any question from anyone before I talk about the workshop itself? Anyone? I greatly appreciated your patience. Okay, no question. Let me just share with you. I think there's a slide from Aventis itself. I think all of you, I think by now you're aware that Aventis is a learning group. They are established in 2008. They have many accolades and awards. And they provide a suite of over 200 seminars. Okay, so the particular workshop that I'm looking at is this. Okay, we are planning to have an online workshop on the 3rd of June, 9 to 5. So I would be covering what I've shared with you in a more comprehensive manner. And we would also be using the materials that I have shared with you. So as part of the total learning experience is each and every one of you will be having a workbook plus the learning materials, and we'll do it online. So please scan this QR code to register.